everyone, welcome back to our weekly market update video featuring by Marketsall and Rationale. Before starting, please take a quick moment and hit that subscribe button to support us for more content like this. Lately, markets have been moving up and down with news around trade deals, politics, and what the Fed might do next. So let's take a step back and talk about what's really going on. So back and forth in a trade talks, we're currently in a phase where countries are trying to sign trade deals, especially the US under Trump, but it doesn't move in a straight line. It's kind of a loop lately. The US threatens tariffs, taxes on imports on other countries then respond, negotiations start, then markets react based on the tone, how harsh it is, depending on that. So whether it's going to getting better or worse. And right now we're in a kind of a deal making phase where markets expect some progress, and that's generally good for a risk on instruments. And it's geopolitics, and apart from trade side, this tariff side, geopolitics also another major things that shaping market pricings. When a trade deal is going well, geopolitical risks tension with China or Russia usually cool off. That's the main mentality. But that's if trade talks breaks down, those risks for sure go up. So investors are watching both together. For example, lately Iran and Israel conflict got heated again a bit. Then we saw some price action as a result of that. But the latest major topic that the market is focusing is yields, bond yields, treasury yields rose significantly. So the question is why bonds and the dollar look weak lately? That's the question. Stocks have been doing okay, but bonds, treasuries and the US dollar haven't kept up. At the beginning of the year, tariffs' potential impact on inflation was the major driver on higher yields, because generally higher yields indicates higher inflation expectation and higher economic growth. And due to this potential impact of tariffs, which would have impact on prices to push prices higher, that was it was expected that with the tariffs price gonna go up. So that's why the long end of the yield curve was going higher. But markets are on a bit edge lately, and there are a few reasons for that. First of all, apart from this major tariffs expectation, Moody is just a downgraded US outlook. And while this didn't have too much impact, it's kind of something hurting the investors' confidence for sure. But the main reason lately is the Congress is debating what's now called this a one big beautiful act, the tax cuts, which is one of the major point of the Republicans' agenda while they were getting into the election. The plan cuts programs that help the poor, lowers taxes mostly for the wealthy, and still increases the budget deficit. So that's the major issue actually. Investors do not mind inequality so much, this taxing, lowering taxes for wealth part, but they do care when it looks no one's even trying to control the deficit. The deficit side is an issue right now. That's why this whole process is likely to be bad news for the bonds. I mean, the bonds are sold off. That's why yields are going up. So it is expected to increase the government's debt, this kind of tax cut. Why? Because if taxes are a cut, the expenditure of government should be compensated from somewhere else, right? So the government will need to issue more debt. That will be more treasuries will be on the market. So that's why the increasing supply of those treasuries will lower the prices of the treasuries and push the yields up. That's the mentality behind it. That's the mechanism going behind it. So, but when I check the yields, actually, yields charts, I think there's still like a trading within the current ranges. Like, so still, I think it's like the market is like overreacting. That's my personal take for sure. Let me show you quickly the yields chart. For example, the chart that you see here is 10-year yields chart, and as you can see, there's it's a weekly chart, by the way. And as you can see, it's currently like trading within a range, right? If we see a price movement just above this level, then I will be worrying. For example, let me go to 2 years yield chart. It's just trading close to the lower bound of this this rectangle chart pattern. And when I go to the most lately, this was the most debatable one, 30-year chart. As you can see, we see a rejection from this resistance level of, let's say, 5%. So what I'm trying to say, okay, I mean, that's for sure. We need to watch out. We need to monitor this kind of significant moves. But I think still there is nothing to worry that much, as at least compared to relatively what's market reacting lately. So yeah, let me just wrap up what happened last week before getting into other charts. First of all, the S&P 500 had its a worst week since since April, because first of all, this US government bonds bond yield issue. Second of all, we received negative headlines between US and Europe from this tariff deals. So as I mentioned, tariff deals are the major decision maker currently in market pricing. So this week has started better with positive news on US and EU. But actually on the Fed side, for the future, they're kind of waiting for some clarity. They're happy with the current economic data actually, but they want some confirmation before lowering interest rate. Their main path is lowering interest rate, that's for sure. And still the base scenario is soft landing for sure, but they need, I mean, amid this kind of uncertainty going politically, geopolitically, and a trade side, they're kind of they're just acting more patiently. That's the main that's how they behave. But they're still open for cutting rates this year. When you look at the strong data, strong especially hard data, US GDP and employment numbers look good. So we see a solid economy actually. And when you look at the soft data, which is more based on surveys, if we see more a pickup on on business confidence, let's say, maybe this a recession fears might go. But companies also, we're just in the middle of earnings season. The Q1 earnings are announced, and the companies are reporting their profits. You can check FactSet for that in order to see some in order to get some insight about the general picture on the earnings side. And currently the profits are pretty okay right now. So we're gonna receive NVIDIA's numbers soonish, and that will be highly influential for the market for sure. And yeah, and now I would like to share some trade ideas based on this general market picture. I'll be sharing some game plans that offer some pullback entry opportunities, often following major price moves visible on more higher time frames. For instance, in the recent, I was mentioning about this weekly breakdown of there is a short opportunity in the weekly chart in, for example, crude oil. You can now currently we're at the you can spot a pullback forming on the weekly chart. And when you zoom in that weekly chart, for example, when you zoom in, when you go to the 4-hour chart of crude oil, for example, you can see that that pullback is also at the same time a descending triangle chart pattern. So it offers maybe like a position, like entering a position. It offers an opportunity to enter a position. So I'll try to show you that kind of trade ideas right now. So let me, before getting into that, I would like to show you also where are we in S&P 500. So this is the monthly chart. And starting from 2008 financial crisis, as you can see, like with the COVID we saw, this move with the rate cuts, with this was a huge rally, as you can see. Then after COVID, we saw that like with the rate hikes, this like S&P 500 came down to lower boundary of this parallel channel, and then AI boom here. You see that this huge move. Then lately, let me zoom in here let me come to the weekly chart. With the tariff news beginning of 2025, we saw this huge decline, getting close to the lower boundary of this parallel channel. Then tariffs delayed, and when you go to the daily chart, as you can see, Trump versus EU conflict and the market is like indecisive right now where to go. But that's where we are. I just wanted to summarize this, what's going on lately, like in a bigger picture. S&P 500 is a good way to gauge it. So yeah, let me go to euro dollar first of all. As you can see, when you go to the daily chart, there was this then shoulder bottom chart pattern which worked pretty well actually, right? Then it's moved up until here, then pulled back, and in order to attend to trend, you need technically you can look for some consolidation. And as you can see, if you just zoom in, you can see that here is another head and shoulder bottom kind of formation is formed. As you can see, breakdown, maybe it's a fake breakdown, sorry, breakout, but if you just follow this chart pattern as an indicator to get into position, that might be a nice idea. Also, I believe in FX, this a lower boundaries of trends are highly pretty working well. So if you just want to do, for example, rather than getting into this position in a breakdown, you can just wait here to be long this lower boundary of this, let's say something like this, right? Not a proper one, but as you can see, higher low, and another higher low is here to come. You can just enter your first position here, for example. Then if it moves more, you can increase your exposure in case of a breakout. That's my take for sure. I would be in a current situation of tariffs, in a current situation of this kind of uncertainty, I would rather to be either a short in US dollar or do nothing. That's why I'm showing Euro USD. I mean, because it's any kind of tariff, uncertainty is bringing US dollar down. So pound USD, same idea. When you go to the daily, as you can see here, there was really nice cup with handle chart pattern. Acted really nice, breakout and pulling back right now. And you can just use this to be long. And by the way, when we go to the daily chart, as you can see, sorry, this was the daily chart. This was the cup handle that I was going to show actually. Yeah, as you can see here, breakout. And I think in order to bet on this, you can wait for a pullback in a 4-hour chart. And I mean, you can put a limit order around here with a stop loss just below this low is a sensible idea, I think. Pound USD. Another potential USD short idea, USD franc. As you might know that franc is highly related to gold because of their a risk-off stance in global economic environment. Apart from that, franc, Swiss franc is it's another good opportunity technically to be long against US dollar. As you can see here, there was a weekly in a weekly chart, huge breakdown. Okay, then after this breakdown, as you can see, there was a pullback, and after this pullback, as you can see, there was like a little parallel channel, which I mean, I don't generally give too much importance to such things, but I'm just using this in order to find a better pullback opportunity. That's my mentality. That's why when it's like a broken down, I mean, when it's the price, sorry, this candle came out of this parallel channel, that's a good confirmation. That's what I'm trying to say. So when it goes back, then this area might act as a resistance. That's why I'm using this. So, but the main bet here is getting into short position when the price pulls back to this horizontal level of this, like a lower bound of this rectangle chart pattern. So that's why also you can put a sell limit order in this daily chart to be short, to attend this like a, sorry, let me show you in weekly chart, this main downtrend. EURUSD, again in the weekly chart, as you can see, breakout, huge movement, pulling back. So pulling back, but where are we going to get into? That's the main issue. So let's zoom in. When you go to the daily chart, you can see something, but when you go to the 4-hour chart, as you can see, there's a really nice head and shoulder bottom chart pattern is formed. Let me show you like this, right? Let me do it again. Weekly, first of all, I'm just spotting the major chart pattern here. It's a rectangle chart pattern, right? Breakout, pulling back. When I go to the daily chart, as you can see here, a consolidation. That's what I'm looking when it's pulling back. Just check whether it's offering like a entry opportunity or not. And I go to the 4-hour chart. As you can see, there's a really nice 4-hour chart, like head and shoulder bottom chart pattern. Generally, the validity of chart patterns in like a lower time frames are not good. Like, I mean, I don't like I don't rely on them a lot, but what I rely on here is this major higher time frame rectangle chart pattern. It's actually, I'm just benefiting from this 4-hour chart pattern as a entry point, just to find out an entry point, you know. And depending on my portfolio situation, because when I get a position, like for example breakout of this with a stop loss like this, as you can see, the stop level is 1.12% here, as you can see, right? So with this kind of a trade setup, my position size will be so high. So it depends on your portfolio size, it depends on your risk management mentality. But if you, for example, if you have like a, I don't know, like a smaller portfolio, then you will need to trade more in daily chart with more like a maybe like wider stops in order to open a smaller position with a percent risk mentality. Because generally, what's the mentality in trading? For example, when you put a stop just 1% below the entry price, that 1% price decrease should lead to some certain percentage of your portfolio to lose. You know, for example, you have 100K, then if the price drops 1%, that 1% should match with, for example, 1% of portfolio. That's how you manage. You can search for a percent risk model to learn about more risk management tools. And I'll try to show like some other trade ideas, some other risk management methods like this also. Let me continue with crude oil. This is the major trade idea that I'm betting on, actually pulling back right now, and I'm trying to find a better entry point for this short trade, right? That's the mentality. So that's why I'm zooming in. Daily chart. In 4-hour chart, maybe we can see better. Oops. As you can see here, there's a descending triangle, kind of first touch, second touch, third, fourth, and coming down right now. That's why it might be a good opportunity. This is like a range trading. Actually, you can be short first here, then if this like a price continues, maybe you can add here. That might be a that would be sensible if it works out for sure. Because if you, for example, the Reminiscences of Trader, the book, I mean, it's a highly influential book in trading. This, you can search for this averaging up rather than averaging down in your position. When your position goes in advantage to your, like in your advantage, then adding into that position is statistically much more sensible. So let me continue. Also in the gold, like this. Sorry. When you go to the daily, if you're follower of our videos, I was mentioning that any kind of like pulling back in gold, any kind of decline or correction in gold prices, still a buying opportunity for me in an environment where rates are going to come down with the soft landing scenario and stuff. So that's the major my major mentality. So that's why when you go to the, for example, 4-hour chart, as you can see here, again, like, I'm sorry, my bad. As you can see here, another head and shoulder, like bottomish formation. But what I'm looking for, a breakout from this, let's say, head and shoulder bottom, should also breaking out from this channel. Since it didn't confirm, like it didn't confirm this mentality, I will be cautious on this, because this, if this parallel channel is valid, which is seen valid in the 4-hour chart time frame, 4-hour time frame, we might see that this price comes down just up until 3,100 levels, which is the lower boundary of this parallel channel. So I'm watching this parallel channel right now. And in Bitcoin, I had mentioned this in my latest video. What I'm expecting to see is something like this. This price to converge this huge diagonal trend line and to form a head and shoulder continuation chart pattern. In order to, I mean, why I'm saying this, this is a huge move from after seeing rejection from this trend line, okay? And generally, trends need to rest at some point to act much more powerful. That's why I just want to see something like this to be more confident on Bitcoin. But it doesn't mean that only like just seeing a correction in Bitcoin would lead to sell-off in altcoin, because I had mentioned this Ethereum Bitcoin chart, which was coming from down, like there was a double bottom. That means altcoins might outperform in a short term Bitcoin. That was my bet, actually. I'm still waiting for that. Just to support this idea, let me show you this Solana chart. As you can see, there's a nice cup with handle chart pattern is like a, let's say, being formed, not yet, but while that Bitcoin is like a, while the Bitcoin, sorry, is doing this correction, we might see the continuation of this move here, and that would also supporting the idea, the Ethereum Bitcoin chart to go up. That's the mentality. And yeah, that's all I'm gonna talk about this week. Thanks for your time. If you find like whatever you see here insightful, please like the video and share to the people that would be also interested in. That means a lot to us. That supports us to create such content. And if you just like subscribe to Marketsall YouTube channel, it's highly appreciated. That will be highly appreciated. Also, you can find the Rationale newsletter link just below the video in order to get all these trade ideas directly to your inbox. You can subscribe to Rationale newsletter video from there. And I wish you a really nice week. Have a good one. Bye.